All right, what's going on, y'all? Today I'm gonna be making a video on how I find key levels, just different ways, different strategies that you can combine to find key levels and targets, for your trades. So you see on Friday we caught some pretty good moves. Somebody made $4,000 from a play we had. Then we had some more good trades. You can see my call outs. I was having the time of my life on Friday. Just a whole bunch of levels and good trades happening even throughout the whole week. So the way I like to find my levels is we can start with supply and demand. So your higher time frames are always going to give you a stronger level than the lower time frames. So, for example, on the 1 hour, you want to be charting your supply and demand on the 1 hour and then executing your trades, on like the 15 minute and the 5 minute um, for your day trades. For, swing trades, you could go up to the day chart and execute off the 4 hour and the 1 hour, so on and so on. So these are the main time frames I use and look at. I have a whole bunch, but I start all the way at the month when I'm really trying to like look and see what a stock or a ticker is doing. And then when it comes to day trading, I scale all the way down to the 1 minute sometimes just to see what's happening like in the moment for very quick moves. But I don't base my trades off the 1 minute. I just kind of get an update on them. So whenever I see like a change of character on the 1 minute, I start expecting for like a flush to happen very quick. So like this move from 518 to 440, I'd be looking at the 1 minute, but the 5 minute and the 3 minute is what I'm mainly. Like I said, I just use every time frame just to kind of get an update for what's going on. So to start, we'll start with the auto fib. So there's about to be a bunch of indicators. Give me 1 second. All right, so the auto fib. All you need to do is just come to indicators, type in auto fib, and do auto fib extension, and it'll bring this up. So with the auto fib, what I like to do is, and you can see like some of my charts. I have like a whole bunch of lines just everywhere, but all these lines mean something. QQQ and all of that. Like, so my QQQ trade actually was this level right here, 59650. I was watching that level, and you can see that's where we rejected from perfectly. I can pull it up in the. Let's see if I can find it. Um, 1 second. Where's it at? Where's it at? So I was saying I like this 59650 rejection. Wednesday I caught a 300 point bounce off of this level, and if we're patient enough, we could possibly get it. This was at 8 o'clock in the morning, and then I sent out a message saying what level did I say? Watch at 133, and you can see I was up $1,500, and this was only the start of the move. Um, but it rejected right at our level, and we were able to catch this trade at the end of the day. So this level was actually from like weeks ago. I think it was like a Friday's high or something. I don't even know what the level was from. I just know it was an important level, and it's been reacting off of it a lot. But anyways, so the auto fib. So what I do on the auto fib is I go on a month time frame, and sometimes when you pull up the auto fib, it'll be weird. Like for example, gold, like it's under it, and even on some it'll be like smushed up. If it's smushed up and you can't really see the levels, then don't worry about it. Is what I say. But so on the auto fib, I'll start on a month time frame, and what I'll do is I'll get my horizontal line, and I'll start making points. I'll start marking out these levels on the auto fib. And so for the 1 month, I use this maroon color. I use a 4 point straight line. And so these levels are I color code them color code them and kind of, make the thickness different so I know what I'm looking at when I'm like in the market and on different time frames and when you have a lot of lines. So like I said, for the 1 month auto fib, I use this maroon color and I use the 4 point, and I'll mark out my lines. From there, I'll drop down to the week. So you see the week is all the way down here, so we won't even really worry about this. But for the week, if you do need it, I do 2 point. No, I do 3 point, and I do this like light blue color. And that's for my week. And then I'll go out and mark out all the week auto fib levels. And then I scale down. You can do the 3 day as well. The 3, I use 2 point, and I use this orange color. And then same thing for the 1 day. So I use the 1 month, 1 week, 3 day, and 1 day. And you can use whatever levels work for you. These are just the ones I use. So I'd go in and I'd mark the 1 day. And basically what this is it helps you. This definitely helps you whenever the markets are like all-time highs. So like if we were to break this high, we could put this level and we could be expecting to go, up here, and we could have some kind of level at all-time highs. That's what this helps with. But it also just helps with, just liquidity levels. Like you can be expecting the market to kind of react to these levels, especially the higher the time frame. Like you can see the 1 month, we're rejecting off of this level, and we're making big drops off of this level. And if we go to the 5, if we mark these and go to the 5 minute, we'll probably have some reaction. We're closing like under this level, rejecting off of this level, and you can see us making moves off of it. So the auto fib kind of helps with that. That's one way to start making levels and to have something. But like I said, there's some more, so let's get into the next one. All right, so the next one, of course, is supply and demand and support and resistance. So demand and support will be the same thing. Resistance and supply, are going to be the same thing. So with supply and demand, what I usually look for is like a candle before like a big move. And like I said, the higher the time frame, the stronger these levels are going to be. So you can go to the whatever time frame you want. I like to usually do it from the 4 hour. And what I'll do is I'll take a rectangle. So you see how we have this big drop right here? This candle before is what I'll mark. And this would be like a supply zone for me. So a supply zone is just where a lot of sellers are sitting. And so off of this level, you see we're usually kind of making some reactions, like we're rejecting off of this level a lot, and we're making moves down. Let's see if we can find another good. Boom, you can even say this candle is a important zone because we're making just big moves off of it. Same thing with demand. Like I said, I just get this rectangle and draw it around. You can see how we're reacting off of this level. So, if you're above it, you could expect us to go up. If you're below it, you could expect us to go down. Just from what we're seeing in the past. And same thing with demand. Let's see if I can find a decent demand zone. I guess you could say this is kind of a decent demand zone. Right here. Yeah, look how it's wicking off of this zone. So you see this week we finally closed kind of under this zone. We're finally getting closure under this zone, so you could expect us to continue going down if we stay under it. This demand is now flipping to supply if we're under it. So that's kind of how you find your supply and demand. Like I said, you're just looking for a candle, the candle before a big move has happened. So see how we have this big move up? The candle before, I just take the wick, like the top of the wick to the bottom of the wick, and that's my zone. And you can adjust it how you need. When it comes to your charting and your levels, everybody isn't going to chart the same. Everybody isn't going to do everything the exact same. So you have to just figure out what works for you. I'm just kind of helping you get an idea of how I look for levels. But everybody doesn't do everything the exact same way. And so, same thing with support and resistance. With support and resistance, I'll just go in and I'll just kind of pay attention to where these wicks are bouncing off of, where we're closing at, and what's happening in these levels. So sometimes you can even go to the 5 minute and create a quick, like, you see this chop zone right here that we're in. I'll just take the bottom of the zone to the top of the zone. Boom, now we have our support and resistance. Now we're waiting for a break of this level, either up or down. So what I like to say is, in levels like this, like when you're trading in this, it looks way different, right? Because you'll be thinking it's going up, and then you'll think it's going down, then you'll think it's going up, but you're really just sitting in the middle of a chop zone. And so whenever you like scroll out, like if you're ever confused on what the market's doing, just take the time to like reset, go to a higher time frame, and really pay attention to what's happening. Because you see on the hour that nothing's happening in this zone. Nothing has really happened until like this candle, and you don't want to get chopped up in it. I mean, you could pop so many accounts or lose so much money trying to catch the up, the down, the up, the down, whenever there's really just nothing going on. So like I said, on the 5 minute, you can see we're just stuck in this zone. I don't like to get, like, in the middle of this zone is what I like to call no man's land. Now, if you're trading in this zone, as long as you're entering, for longs at the bottom, shorts at the shorts at the top, then you're good. And you're just using a stop loss kind of above these levels, but you don't want to be getting in a trade, in this area. You don't want to be getting in longs in the middle of this zone, because you could easily get stopped out if it just pushes down to this support. It's possible you can make money, but you're not going to catch a good move like you're wanting. Your risk to reward isn't going to be good, is what I'm getting at. So you want to be getting in, close to your support, close to your resistance with your trades, or you could be waiting for a breakout. And then when it breaks out, you can just take this move to your next supply zone or your next demand zone or whatever it is. But you don't want to be trading in the middle of this. And there's different indicators, EMAs, and all of that can help you. You want to have as many confluences as you can in a trade. We're just kind of going over supply and demand, support and resistance, but as many confluences as you can have. Like if I turn on all my indicators, it'll be like a party in here, but as many confluences as you can get is what you want. This is just like the base of everything, the base of your levels. This is where you go in before the market's open and just chart out levels that you're looking for, and you just have an idea of what you want to see and what you think the market could do. Because none of us know what the market is actually going to do, but the more we can be prepared is when you're going to have your good days. Because if it plays out in your favor, then you'll have a good day. Also, psychological numbers is a big thing. So like NASDAQ 25,000 is a huge psychological number. What I mean by psychological is just like, your whole numbers. So 24,900, 24,800. You could even say like 24,850. When it comes to like QQQ and all of that, 590, 593, like whole numbers. 591.50 is a psychological number. And so like 591.37 wouldn't really be a psychological number, because who's just throwing 37 out there. So that's what I mean by psychological numbers. Usually you can expect some movements off psychological numbers. Or if you're trading options, paying attention to like the strike prices is another thing. So with SPY, you'll see strike price like 660, 662, 665, and all of that. Paying attention to like strike price numbers could be psychological numbers as well. Another thing that helps my levels while I'm trading, so we have supply and demand, we have support and resistance. Another one is trend lines. So trend lines just help you identify the trend. So I'll take like a low point and I'll just kind of draw a trend line. And what I'm looking at on this trend line is to see if we respect it or if we break trend. So you can see right here, we're currently, and you could do this trend line from, you could do it from the 4 hour, the 1 day, you could do the trend line from whatever. So you see if we really just zoom out and make a trend line, you see we actually broke trend here. So now this becomes like resistance. So if we retest this trend line, right, I'm going to be expecting us to retest the trend line and fall again. And like I said, when it comes to trading, you're looking for multiple confluences. You're not just going off of one thing. You're looking for you're looking for different confluences that's lining up and other things to go off of. But you can see we felt this trend line, kind of retested it, broke above, but we fell right back below it when we rejected off of this level. And so now I'd expect us to start rejecting off of this trend line. And until we reclaim it, my bias will be bearish just from this trend that we have right here. And this is on the 4 hours. So like I said, this trend line would be way stronger than the 1 hour and be way stronger than a 5 minute trend line because we're on a higher time frame. And so with the trend lines, like I said, I'll draw it on a 5 minute while I'm trading throughout the day to see what it's doing. I'll kind of draw a point, see how it reacts off of that, and then even like these highs. And now what it's making is like a triangle. I know it doesn't look the best. Your lines don't have to look the best, so don't think everything just has to be so pretty or perfect, because it'll still give you a good, like I said, you're doing it with confluences, so it'll still give you a good idea of what's going on. And with this triangle, now what you're waiting for is like a break of this triangle. I think I deleted all my gold drawings. Yeah. But I had like a triangle on gold, and it broke out of that triangle and it made a, move up, made a move down. You can see on gold, I have a whole bunch of lines. And so like this 4070, well, I have it at 77, but this 4075 level, let's go to the Discord, and you can see need to lose 4075 for the final flush. And then we lost it, and look what happened. We got that flush that I was looking for. So this is where, your lines and your support and resistance and all that play a part. Because once you start losing levels, you could be expecting to go to the next level on your trade. So trend lines is good. Like I said, you can make a little triangle like this. You'd wait for the breakout. You could use this trend line to know that usually we're bouncing off of this trend line every time we tap it. So here you could possibly be expecting a bounce until we break it. Once we break it, then that trend, is over. So we got trend lines, support and resistance, supply and demand. Like I said, there's so many more things, but this is just something that you can do every day to chart out, just to get an idea of what the market could be doing. And even in the middle of your trading session, like I said, if you're ever confused on what the market's doing or you don't have a good read, just zoom out. Like most of the time I'm like this when I'm trading, and I only see, and you got to keep in mind it doesn't even look like this. It looks more like this in the moment. You know what I mean? And candles are printing in the moment. Because right now it looks like it's going down, and now you see we're just kind of staying in this range or whatever. And you don't want to be getting chopped up in this. This is just a big chop zone. These are the moves we want. We want moves like this, moves that are just going. If we're in up here, then this is a good entry, because we're still we're still making lower highs and all of that. But we want to be getting in moves that are moving. We don't want to be in the middle of these chop zones, because like I said, that's how you get burnt a lot. So if you ever find yourself confused, just zoom out, like far out, and just really look at what the market's doing. Go to a higher time frame, check a higher time frame, and see where the market is trying to head, because you don't want to get chopped up. And if you can't if you can't figure out where the market's heading, that's probably a sign to just leave it alone and don't trade it. Just wait for a clear read. Um, I'll pull up the Discord one more time. You can see that up here. Let's see. No more clear reads for me taking profits and calling the market is going to make a big move in some direction. We had the best entry for shorts and longs. So, around 12 o'clock, I wasn't able to read the market no more. Let's see what it was looking like at 12 on this day. So that'd be what? 13. I think it was like right in this zone is where I was saying that at on Friday. And you can see like there's no clear read. Like I don't know if it wants to go up or down. So I had no clear read on it. And then we finally, started making moves. And then this is where I got interested again because it was at my level. This was at like 2 o'clock, an hour before market closed. It got to my level that I was watching. Because like I said, on QQQ, my level was 59650. And it finally got up to my level and it started dying out here. And I'm like, okay, this is my level. It's looking good. I can take a trade off of this. So I got my entry, set my stop loss, respected my stop loss, and, we was able to capitalize off the move. And like I said, this is where you can start adding different indicators. I have way more than this, but, while I was in the trade, I was saying that we didn't have any volume until 592. We didn't have much volume. If you look at this VRVP, there's not a lot of volume in this zone. So I knew that if we started losing levels, that this chart would fall pretty quick because there was no volume to catch it. And so I made a level off seeing where, the next volume nodes were high. And you can see it's around 592. I think it dropped to like 591.50 is when I like full sold. But you can see it even went below that and continued to drop some. Same thing with gold. We were in a gold trade at the same time. And 40.75 was the level I wanted to see it lose. But you see I have these lines. Once we lost this, it just continued to drop. Like there was just nothing to catch it until this level down here. And 40.55, I'll bring up the Discord one more time. You can see we caught, went long off 40.55, didn't signal it. I was up in profit. You can see my entry right there, 40.55. And I sold this one early because you can see if I go up some, look, we have 40.55 on our watch list. The key pivot point was 4,100. Like I said, this is all before market open, and we're just going off of our levels, right? And you can see the market hit 40.55. We got our entry, we got in, and on gold it ended up climbing up all the way to 4,100. And we had shorts here. We were looking at shorts from 4,100 to 4,115. And when you're calling out these levels, you want to be paying attention to how it's reacting, off of these levels. You don't want to just jump in just because it tapped your level. We want to see how it's reacting. So I didn't catch this short, but somebody did, because I wasn't confident enough. You can see it kind of happen quick. But like I said, we had the best entry for longs this day because 40.55, we got in here and we took it all the way up here. And then we had the best entry for shorts as well because you got in at 4,100 and you literally took it all the way back down to 40.55. And so that's why your levels are so important, because you could literally just trade off supply and demand if you want. But the more indicators and the more confluences you have, the more you're going to be able to manage your trade and take trims and know kind of what it's doing. So hopefully this video helps with finding your levels and giving you an idea on how to chart levels. I'll get back to making videos more and more on just different things that can help you in the market, but let's continue to work and get to it.